When we hear the names like KFC and Pizza Hut, tasty fried chicken and pizzas come to our mind. But as an investor, we think of Devyani International, which is the largest franchisee of Yum brands and one of the largest operator of quick service restaurants in India, with 655 stores spread across 155 cities. If you have never heard of the Yum brands, let me give you a quick introduction. Yum Brands is an American fast food corporation which is one of the world's largest fast food companies in terms of system units. It owns several iconic brands such as KFC, Pizza Hut, Taco Bell, The Habit Burger Grill, and many more. The company operates in 135 nations worldwide. Devyani International Limited, popularly known as DIL, is a subsidiary of RJ Corporation founded by Ravi Kant Jaipuria in 1991 that made its first association with Yum Brands in 1997 by opening a Pizza Hut store in Jaipur. If we look at the company's business segments, it is majorly divided into three segments. The first segment is core brands with a total of 73% of the revenue. This includes KFC, Pizza Hut, and Costa Coffee. They currently operates 284 KFC stores, 317 Pizza Hut, and 44 Costa Coffee stores as of June 2021. Among the core brands, KFC contributed 61% of the revenue, followed by Pizza Hut with 27% revenue, and the remaining by the Costa Coffee brand. The second segment, which is the international business, which includes their operations of KFC and Pizza Hut stores in Nigeria and Nepal, where it has 34 KFC stores and 3 Pizza Hut stores in Nepal and Nigeria put together. Finally, Devyani International owns and operates the South Indian QSR chain Wango, as well as food court restaurants and bars in airports, hospitals, malls, and highways under the brands Wango, Food Street, Masala Twist, Amarelli, etc. Devyani operated 54 outlets of these brands as of 30th September 2021, with Wango being the most popular with 27 outlets as of June 21st. Wango stores sell traditional South Indian snacks such as dosas, idlis, and vadas. So with such diverse business segments, let's understand what they have done differently from others that has made them popular in the QSR business. Number 1 is Devyani's online distribution accounted for 70% of the sales from its core brands in financial year of 2021, which is a 19% increase from financial year 2020 with the help of online delivery channels including Pizza Hut and KFC mobile apps, web and telephone ordering services, and other delivery providers like Zomato and Swiggy. Secondly, Devyani's territorial rights of KFC in India are spread across the southeast and northeast regions, as well as a few key cities in the north which have a high non-vegetarian consumption zone. Here, Devyani has an advantage because poultry is the preferred choice of meat for the majority of non-vegetarian consumers in India. Finally, the company is moving towards a leaner business model by shifting towards delivery model and smaller store formats for KFC and Pizza Hut. In line with this business model, they have in fact closed down airport concession stores and 61 non-performing stores to improve business efficiencies. The company has also implemented an aggressive store expansion strategy, adding 100 plus stores in financial year of 2021 and 40 stores in the first quarter of financial year 2022, with plans to continue this for the next 2 to 3 years. The company also acquired 73 KFC stores in South India from its parent Yum Group between the year 2019 and 2021. To sum up, thanks to this huge presence, the future of Devyani International looks very bright. To look further, we must understand how the favorable trend of QSR is going to unfold. The food service industry itself is expected to grow at a CAGR of 12% to 15%, and QSR being the largest constituent, Devyani International will be a key beneficiary and will lead this growth. Also, COVID-19 has accelerated the food service industry's consolidation in favor of larger, more organized players and well-established brands. Not only that, the company is speeding up its store expansion. In fact, if you look at the second quarter of financial year 2022, the company added 68 new stores across all brands, including 25 new KFC stores and 34 new Pizza Hut stores in India. Furthermore, unlike other brands, KFC and Pizza Hut have a strong reputation, allowing the company to focus less on marketing and advertising. Devyani also owns the pan-India ride for Costa Coffee store, which serves a diverse menu of coffee, sandwiches, wraps, Indian snacks, desserts, and other beverages. Prior to COVID-19, the Costa Coffee has contributed around 5 to 7% of Devyani's total sales. As a result of these factors, there will be a significant positive impact on the company's future growth. With the promising future growth of Devyani International, we must understand what will be the key risks that the company may face going forward. During the time of COVID-19, the restaurant industry was severely impacted and a large number of unorganized restaurants had to shut down their businesses. For DIL, Costa Coffee was significantly affected during COVID-19 due to restrictions on dine-in, as coffee consumption is more of an in-store experience. Accordingly, Devyani closed down several of its stores during the pandemic, which resulted the sales of the company to decline by 74% in financial year 2021, but at the same time it is expected to improve going forward as store addition resumes along with the recovery in dine-in. Furthermore, with the recovery of economy, most QSR players are trying to accelerate new store openings. This could increase competition intensity, resulting in more discounting and slower growth in per-store revenues and thus reducing QSR profitability. Food aggregators will also be able to compete if they maintain aggressive pricing strategy to drive customer acquisition, which can result on less margin for QSR companies. Also, raw material inflation can have an impact on profitability. If you look at the current situation, food inflation has increased, which was mainly led by edible oil. If QSR chains are unable to offset this through price increases while facing increasing competition, their gross margin profile will be impacted, and as a result, store profitability would take a hit. Also, Jubilant Foodworks, the market leader in pizza segment with the franchisee of Domino's Pizza, has shifted its focus in the pizza category to home deliveries, whereas Pizza Hut's extensive focus on dine-in business has led it to underperform in the delivery channel in the past. Finally, any regulations on minimum wages that are mostly decided at the state level may result in wage inflation. This in turn would have an impact on store profitability of QSR players like DIL. Now, let's take a look at the peers in this business who can give competition to Devyani International. In terms of franchises of Yum brands, Devyani International and Sapphire are the only franchises in India. In comparison to Sapphire, DIL operates a large number of Pizza Hut locations. The two also differ in the types of formats they operate. While Sapphire is limited to only dine-in stores, DIL can operate both dine-in locations and Pizza Hut delivery stores. This means DIL has a much larger store network with locations in over 100 cities compared to only 35 for Sapphire. Sapphire's reliance on larger dine-in stores may result in higher per-store revenue. However, DIL outperforms Sapphire in terms of profitability with a restaurant-level EBITDA margin of 13% versus 5% in financial year of 2021. Also compared to the QSR peers, Devyani's QSR segment is set to increase its store in higher numbers, indicating that the business expansion is going to play a major role going forward. That being said, let's try to understand the promoters and shareholders of Devyani International. Devyani International Limited is a subsidiary of RJ Corporation founded by Ravi Kant Jaipuria. RJ Corp is a multinational conglomerate with successful ventures in beverages such as Varun Beverages, fast food restaurants, livestock like Creambell, healthcare and education with a presence in 26 countries through its subsidiaries. As of October 31, 2021, RJ Corp held 59.44% of the company, with other promoters such as Varun Jaipuria and Ravi Kant Jaipuria holding the remaining. That is, in total, promoters held 62.91% of the equity shares in DIL. If we look at the financials of the company, DIL has been witnessing a growth of sales since 2017, where the sales stood only at 1048 crores, while in March of 2021 it was around 1135 crores even after the impact of COVID-19. However, the net profit was at negative 55 crores, but still at a better level than of 2020, which was around a loss of 122 crores. the company's overall operating profit margin has been on an increasing trend as well. Interestingly, the company's debt has multiplied to 1,122 crores while it was only 371 crores 3 years back. At the same time, we believe that the debt has been accrued mainly due to the expansion of the stores. With both revenue growth and profitability on the rise, the company remains confident in its ability to fund its aggressive growth plans through internal accruals. Currently, Devyani is having a valuation of 21,121 crores in market cap. So, is this a justifiable valuation going forward? Well, DIL is benefiting from a favorable macro environment and has multiple levers of growth and margin expansion. This including accelerated store addition, improved business environment, debt reduction, rationalization of store format, acquisition of rights for Pizza Hut delivery format, recovery in dining despite delivery remaining at higher levels, expansion into new cities, as well as flexible work arrangements. Also, Devyani's KFC business enjoys strong brand equity due to its unique offerings. This has led to a robust average daily sales and profitability. The business is expected to deliver 41% sales CAGR over the next 4 years, led by rapid store network expansion from 264 to 574 over the same period. That being said, we hope you enjoyed the video and do let us know what are your thoughts on Devyani International Limited in the comment section below. Also, please hit the like button if you found this video informative. Until the next time, it's a goodbye from me.